Crypto Hotep here with another investing video. We are on week 102 of the Family Portfolio and Dividends Tracker. I really appreciate you guys tuning in again, week in and week out, holding it down. I really appreciate it, guys. And thank you for your just your comments, your likes, and your subscriptions. If you haven't subscribed to the channel, it's free. Click that subscribe button and turn on that notification so you know when I drop the next video, because I have a couple videos in my channel related to budgeting, related to investing, and also related to crypto and trading, guys. But this video is going to be tracking our family portfolio if you're not familiar. So basically I gave my family a short list of stocks to choose from. They chose the companies and stocks that most resonated with them and the ones they knew. And then we proceed to use M1 Finance as our broker of choice. And every week we track this portfolio. Rain, sleet, or shine. Doesn't matter if we're doing good or if we're not doing well. We're going to track the portfolio and kind of document our investment journey as a family, guys. So, but by no means is this financial advice. Again, if you want to use M1 Finance, there will be a link in the description below. But these videos are for our own edification first and foremost. They're for me and my family, and hopefully my family can see these videos when I'm gone, and maybe they can keep on investing. Maybe not recording, but keep on investing and just understanding and wanting to understand. But if you like these videos, like I said, like, subscribe, comment, let me know what you think. But before we get into the portfolio, let's go through a couple news events this week. So on the news side, this week was pretty tame in terms of news calendar. The only thing really that stood out was initial jobless claims that came out. But it wasn't stable because it was very volatile. Again, those U.S. and Iran tensions and war that's going on right now, it saw the markets with a lot of ups and downs, and that's because there was a lot of de-escalation and then a lot of escalation back up. Like, you know, Trump saying that there have been talks with Iran and potential ceasefire coming about, and then Iran saying, nope, we're not accepting your offers. There were no ceasefire at all. So a lot of ups and downs in the markets, guys. And again, this is one of the reasons why you need to understand what you're investing in, and you need to believe in it long term. This is what I'm speaking about here, the de-escalation signals. And then, like, even oil spiked, and then it reversed the whole spike up and went down 6 to 8%. It's crazy. It's just, oil typically doesn't trade like that. So it was just very, very odd. Other than that, there's just been some ongoing Trump tariff adjustments that have ripple effects on the Iran situation. And then just a couple things to keep in mind, right? So we have U.S. GDP final revision, okay, coming out next week. And then we also have the potential start of the delayed global 10% tariff rollout. If you remember, President Trump, he delayed those 10%, just one kind of percentage across the whole board. Those rollouts, he did put a delay on them. That delay is coming up. So we'll see if there's going to be any further delays on there. Okay. And then we do have non-farm payrolls in early April. So again, you know, a lot, but the Middle Eastern war that's going on right now, that's the focal point, because that's right now is driving the markets, driving the equity markets to the greatest point I've ever seen. They're trading like crypto. It's really amazing to see. Before we go to 102, let's go to 101, week 101, and let's see where we're at. So week 101 saw us with our portfolio down $3,906.99. So we were below 4,000. Money weighted rate of return of a negative 2.77%. Wait, you can get negative returns in the stock market? Yep. And that equates to a negative gain of negative $120.03. Dividends earned, though, positive $11.49. So this week at 102, where are we at? Did we at least crack 4,000 again? Because it was a payroll week / a contribution week, but no, we actually went down further. So we have a balance of $3,895.07. We went down even more, even after contributing, and our weighted rate of return is a negative 4.88%. Market gain now is a negative $203.29, and then dividends earned still at that $11.49. As you can see here, we're coming back into kind of the support area of our graph here. So the year-to-date graph doesn't look good. But if we zoom out, again, this is just a small little blip right now. That is a small little blip. Look at that, up and to the right. This is a small blip right now. And that's okay. So let's see what the activity is that we have here. So we were blessed with an extra bonus. So guys, normally our portfolio, I should say, we only deposit a certain amount every 2 weeks, and we only have $20 every 2 weeks consistently, unless we have a deposit or another bonus that we're blessed with, which we were. So we deposited another $50 into the account, and we made 11 buys. What did we buy? We bought some Sony, Amazon, Tesla, Google, Cintas, AbbVie, Apple, McDonald's, Microsoft, Celsius, and Moody's. Okay, all good buys here, especially because the market's dipping. So again, if you understand your companies, you understand how they make money, and you understand what they do in the markets, and if they're a leader, these dips in the market, these are just gold mines. These are opportunities for you to buy these great companies at discount prices. Okay. So let's go, no dividend activity. Let's go to the portfolio, guys. As always, we go bottom to top, and we have a change now. So my wife is actually at the bottom. She was as high as the third place, but right now she is actually at the bottom, and I believe I know why here. So again, her year-to-date chart not looking too good right now, but again, we've been here before. We've done this before, and you guys can watch those old videos that we've recorded. So $546.27 is the balance, a negative 11.8%. Money weighted rate of return, dividends earned of $1.60. So again, we're looking at Google, right? So Google is down over 10.5%, almost 10.5%. Pepsi's still up in the green though. This is the shining beacon, and this is that foundational holding that is just holding it down. It's an anchor. There's only one in the green, up over 6%. And this is the Achilles heel here, Celsius. Celsius is down over 22%. That'll drag anybody's portfolio down. However, when it's up, it carries the whole portfolio. Okay, do we feel a certain way about Celsius just because it's down? I don't believe so. I feel still very strongly about Celsius. Pepsi and Celsius go kind of hand in hand because they have some of the same business conflicts, if you will. So I'm really not worried about that. Microsoft, unfortunately, still kind of low on Microsoft, down over 23%, and then Tesla following the suit with all our tech companies down over 17%. Okay, again, there's going to be the good days and the bad days. We've been through a lot of bad days in this family portfolio. So this really is nothing. Our middle has still a positive rate of return of 0.28%, money weighted rate of return year to date. The balance is $565.89. Dividends earned of $1.79. Market gain of a negative 31 cents. So Target is still up. We're still up over 20% on Target. Costco, we're still up over 10% on Costco year to date. Amazon, though, down almost 10% here. Starbucks up over 9% there. And then again, the trifecta here with tech, Sony, Google, Tesla, down right now. Okay. Again, these are all fantastic companies though, and the vision of those companies has not changed, I should say. Our youngest portfolio is balance is $566.27. Money weighted rate of return year to date of 5.20%. Market gain of a negative $30.47. Dividends earned of $1.06. So again, very similar to our middle. Costco carrying the weight over 13%. Starbucks carrying the weight as well, up over 9%. And then again, trifecta of tech: Apple, Sony, Tesla, down, down, down. Apple down over negative 6.5%. Sony down over negative 21%. And then Tesla, very similarly, down over negative 17%. Okay, let's go to my portfolio, and my portfolio is at a balance of $1,099.84, money weighted rate of return year to date of 6.18%, and then a market gain of a negative $74.95, dividends earned of $4.71. Tech is always going to be bleeding out. It's the worst sector in my portfolio, down over a negative 16.25%. Finance, we are actually down. That's the second worst sector, is finance, down over 13%, with Visa down over 12%, and then Moody's down over 14, almost 15%. But guess what? We bought the dip on some Moody's today. So, okay. Industrials and energy, we have Waste Management and Cintas. You know, Waste Management can only do so much. Cintas is at a 52-week low right now, and we are down over 10%. But we did, guess what we did? We bought a low dip. Bought a low dip with the chips on Cintas. Okay. Our old realty income is probably the only thing that's shining in our portfolio. Up almost 8% still on old realty. And then consumer staples. Consumer staples, we have Costco carrying that load, and then Lowe's, right? So again, Costco following the trend like with everybody else's portfolio, up over 13.5%. Lowe's still trying to chug along here. Pharmaceuticals, AbbVie is down. AbbVie is down over 6.5%. Pharmaceuticals. And restaurants and food. Restaurants and food, Coca-Cola and Domino's Pizza. Coca-Cola is the GOAT, but they can only do so much. Domino's Pizza down in the double digits, almost 14% negative right now. But again, really not worried about Costco right now. Or, excuse me, I'm really not worried about Domino's Pizza right now, I should say. I would get some more Domino's Pizza as well on the next contribution. So I would definitely buy a little bit more Domino's Pizza. So all in all, with my portfolio, again, I'm not really worried about this. We've been here before. This is really nothing right now. So Otis, we have a balance of $1,116.80. That equates to a negative money weighted rate of return of 2.20%. Dividends earned of $2.33. Market gain of a negative $26.81. Very similarly, we have Apple that is bleeding out over 6.5%. Tesla down over 17%. But we have a shining star in McDonald's that's still up over 1.5% year to date. And then Costco again. Costco saving the day for everybody's portfolio in this family. You cannot beat Costco. I always say Costco will Costco at the end of the day, up over 13.5%. We love to see it. And so with that being said, guys, we will make this video a little shorter today. Just know, like, with these markets are going to be volatile until the end of the situation in the Middle East. That's just how it is, because everything, the markets are going to play off of the words that Trump says, off of what the Iran officials say, and their tweets and all of that. So you have to have a solid stomach for this, and just reduce the noise. Don't even worry about any of this stuff. Really don't. If you have conviction in your plays, in the companies that you're trading with, or investing with, I should say, not trading, in long-term investing, then again, these are just little blips on the calendar is all. They're not a big deal at all, guys. So for week 102, we have a balance of $3,895.07. We are down over 4K, with a money weighted rate of return of a negative 4.88%, market gain of a negative $203.29, and then dividends earned of $11.49. Guys, whenever anything looks like this in the markets and you're looking at a short-term time frame, just kind of zoom out here and see how far you've come. You can see right here, this is where we were this time last year. So all in all, we are in good shape. And if you've invested in some good companies, then I'm pretty sure you're in good shape too. Again, you're just getting these great companies at a discounted price. And as always, guys, thank you for watching. Please subscribe, comment, like, let me know what you think. And happy trading.